Hello, folks. Welcome to CRT and CRT Submastery YouTube series. And before I'm gonna get started, I'm gonna talk about some notes, important notes. First of all, every single word that I will say is important. This first episode is the most important episode of the series, so make sure you take notes because it's crucial if you want to understand the next episodes, since I will not repeat most of the stuff in the future. Also, before we start, I will only focus on the profiling, right, on this episode. Market profiles, the entry and the key level, and the other topics will be discussed in details in the future episodes, right? Welcome to episode 1, market profiling. So first of all, what is market profiling? In summary, it's rejecting lows, broken highs, or vice versa. Rejecting highs, broken lows. So if you see here, right, we have a low, right? We have the high that broke the low. First entry, trade sub, expansion. When we broke a high that took the low, right? That indicates change in delivery, right? So we are bullish from now. Then we look for the dump, the OTE. So first of all, soup, the OTE. So what we are doing here is first of all we reject this low and we broke this high, right? And second of all, we engineer liquidity. You see this low that broke the high. Usually it's fake, and I'm saying fake for a reason, right? You need to be scared for this low, especially on the lower time frame, right? So broke the high, engineer liquidity, dump, and we reject this low, which means we never displace through it, right? Key level expansion. So we reject the low, and also we broke this high. We are still bullish, right? Also, same thing here. Engineer liquidity, low took the high, right? We reject this low into key level, then we expand, and also we broke the high. This is what is this? This is a bullish market profiles, right? So this is the first method, which is the Romeo method, right? By using the line or the order flow. Now we have the reversal, right? Obviously there is a key level here. There is a high time frame PDA here, right? Range, trader soup, broke the low, first indication of bearishness. Then the OTE, deep retracement, the expansion, right? Then we shift in state of delivery, change in state of delivery, right? Now we're bearish. So wait for the fake high that broke the low, right? Then we reject the high, broke the low, right? And start rejection highs, broken lows. This is a bearish market profile, right? So this is the first method, Romeo, the line or the order flow method, right? There is a other method, which is by using a higher time frame candle. All right, so the second method is by using the higher time frame candle or candles, right? And if you have a question about which one is the best, the order flow version or the higher time frame candle, I would say that both are really important. So yeah, you need to use both. So we start by the 3 candle model, right? So if we're trading we are candle traders, right? So we are trying to trade one candle, one specific candle, right? So the 3 candle model is so important for buyers, especially on the high time frame, right? So we have the candle number 1, candle number 2, right? I'm focusing on how you can expect an expansion candle, and how to profile a expansion candle is gonna came very soon, right? I'm just starting with the 3 candle model. So we have a range, we have candle between a manipulation or church soup, candle between expansion candle, right? So we have 2 important factors, right, before trading the candle number 3, right? First of all, 2 very important price levels, right? First of all is the invalidation level. The second one is the uh, the targets or the drawn liquidity, right? And you can add the opening price, right? So this is the first signature for expansion is gonna happen. The second one, the second signature is the swing low. Usually after a swing low is formed, right, the fourth candle is gonna deliver higher, especially if drawn liquidity is higher, right? So the first one is the closing side, right? So we wanna treat a candle number 3 as an expansion candle, and if you miss candle number 3, swing low is formed, right? You can still uh, use or expect an expansion on candle number 4. This is the basic, right? And here there is 2 things on candle number 4. So if you see the third example here, we have 1, 2, 3. What's the difference here? Is the close above this opening price or the high, right? So we cannot treat this candle as a change instead of delivery, as an OB, right? So you can expect expansions by 3 things. First of all, the soup, right? Second of all, the swing low, right? In this example, and or by closing above a down close candle if you are bullish, right? Soup, swing, or the close here. So here in this example, we have the swing low, but we don't have the CSD, change in state of delivery, right? So we're gonna treat every candle as an expansion candle, first of all, until we reach this level, right? If we close above, we're still gonna keep buying, right? Every candle, like the fifth candle, right? So the second method is by using the swing formations, right? Which it was never spoke about, right? From Romeo, right? So there is 2 methods actually. It's not the CRT only. There's only a swing formation. So if we pay attention here, we have candle number 1, candle number 2, close below with body, right? Until here, we don't have a signature for bullishness, right? If you are bullish, right? But once the candle number 3 closes, right, like this, doesn't mean close above. It could close below the opening price, right? But the most important thing here is the swing, right? And obviously you can expect a bullish, this for advanced and future lessons. You can expect this candle number 3 as a bullish candle, right? But I'm gonna focus on the signature for a bullish candle, right? In this example, swing formation is formed, right? Which means the candle number 4 is gonna be an expansion candle, right? This is really important, right? And in this example, the difference is we're gonna keep buying on candle number 5, right? Because we have the CSD in this example. So once candle number 4 close above the this series of down close candles, could be 1 or it could be 2, 3, anyways. But once we close above the series, the CSD, right, formed, we need to we can expect an expansion candle after we close above the opening price or the high, right? And this is really important. So we have two high probability higher time frame candles, right? Until here we have one. Once we close here, we have another expansion, and this is a good signature if you're entering here to hold. So as explained before, there are two ways of expecting expansion candles, right? Swing, candle number 4, after the swing or after the CSD, right? So in this example of three candle model, we expect right after the soup an expansion candle, after the CSD. In this example is candle number 4, right? And there is a lot into it. Candle number 3 is not necessarily deliver or close above, right? It can just close above here and form a swing. So candle number 4 is going to be here, and candle number 4 maybe close above, and candle number 5 it could deliver price higher after the CSD, right? So what is this and this and this? Those are expansion candles, right? So expect expansion candles to be a classic buy candles, right? Now we're gonna profile those specific candles, right? For the market profiles, since the price is fractal, right? So the way you profile the monthly candle, yearly candle, 3-month candle is the same way that you can use to profile a weekly, daily, 4-hour, right? Because price is fractal, the same thing is gonna happen. That happens on the high time frame is gonna happen on the lower time frame, right? So since we profile the markets, right, and we expect an expansion candle, this is the classic buy monthly candle, right? And if you pay attention here, before the candle open, right, we expect week 1 to be a range. This is the classic buy, right? Week 1 range, week 2 manipulation, week 3 expansion, right? And after the swing and the CSD, this is a good signature for for week number 4 to be an expansion, classic buy, right? So before the monthly opens, right, this is our idea, right? Week 1 range, week 2 manipulation, and so on, right? The other thing that the market can align is by using the swing, right? So it can be week 1, week 2 close below, week 3 swing, and we expect week 4 to be classic buy, high probability classic buy, right? And obviously after the CSD, we can even expect week 1 from the next month to be a expansion candle because we have the CSD, right? This is it's going to be discussed later, right? The thing here is we are not the classic buy. We are like, it's not every month you will get a classic buy, right? This is the tricky part, which is the variation, right? It's not fixed thing that's always gonna be a classic buy, right? So let's say that this is week 4 from the previous month, and this is week 1. So if week 1 manipulates, right, we expect week 3. If week 1 manipulates, we expect week 2 and week 3 to expand, right? Because here the market is aligned. I'm gonna use the the word align because it's easy to understand, right? And this is my way of teaching, by the way, guys. This is my simplified version of my view, right? So this is my way. So what we are doing here is that we are waiting for the weekly to align with the monthly. So the monthly is bullish here, monthly is bullish here, but the weekly is not bullish, right? The weekly is retracing on week one. So it's not bullish yet, right? Only after the soup. So there's two things for the market to align. First of all, is the manipulation. There is only two ways, right? We either have a soup or we either have a swing. There is no way we're gonna have something else, right? So the first thing, the first signature that you are waiting is the week number two. You can trade week number two. That's another topic for later, right? When we go in details for when we discussed other topics like key level and the energy techniques, and we go like even deeper. So week number two, market is aligned. So we expect week number week number two, and week number three as a classic buy since the week number one manipulates, right? Let's say that this is week number one. Let's say that the monthly opens here and week number four already manipulated, right? So we expect week number one to be an expansion candle, right? If we have the CSD or the swing formation, we expect even week two to expand. Then the manipulation, the monthly manipulation is gonna come like later because we are on expansion phase, right? So only after we take liquidity, the external or something, or we hit a key level, rejection block OB, hard time frame key level, then we can start retracing for the OTE or maybe reversal, right? So this is our view, right? Second of all is by the swing formation. So week one, week two, week three, swing. So we have a very high probability week four, expansion candle week four. And if week four expand and we have CSD, we can even expect week number one from the next month to expand to be a classic buy. So we're just profiling the market, right? Right. And if you look at the order flow, right? We have an open low for the month for the classic buy candle, right? We have the low of the candle number one, right? Candle to open Jersey stop manipulation here below this low. Then we have the broke of the high that created the low, right? Expand. Once this high is broken, we're bullish, right? So what is the best thing to do is to wait for the next higher time frame candle to open, right? Why? Because of the OTE. So we always expect an OTE after the candle number three is open, right? This is really smart to do. That's why the opening price is really important factor. So once we open candle number three, we get the OTE, right? Then we get the expansion. Then we have the after the CSD, or you can call it the flip of the opening price, right? We get another expansion candle, which is Jersey soup expansion candle. So this is the order flow, right? So what we are doing here, we are entering below these lows or on the OTE, right? So there is always an open low. We're gonna talk about the entries later, but this is the order flow. So we're gonna use the classic bi-weekly candle, right? So after the market is aligned, after the weekly is aligned, so we have week one, week two, week three. So we have a higher probability week four. So classic buy candle, right? We can now go into the profile using the daily candles, and we can go even deeper, right? And for the three candle model, we can expect candle number to be an expansion. We can use the same the profile. We can use the same profile for the daily, right? So we have the classic bi-weekly candle which have a day 1 Monday range, right? So we have a Monday range open low, and we have a Tuesday manipulation. So after Tuesday, right, the daily is aligned with the weekly. First of all, we start with the monthly by using the profiling the monthly candle by using the weekly candles. Now we're gonna profile a weekly by using daily candles, right? And we're gonna do the same thing for the daily by using 4-hour candle, right? Anyways, so we have the Monday range. This is the classic buy. This is the basic. Like, it's not fixed, but this is the highest probability, right? Monday range, Tuesday manipulation. So after Tuesday manipulation, we can start expecting a bullish expansion days, right? So we have a Wednesday classic buy. We have Thursday a classic buy, right? And if you pay attention here, we have the swing formation with the CSD. So it's a very good indication, very good signature, right? To look for buys. Always, when we close above the opening price or down close candles, it's always expect an expansion, right? If you are bullish. So we have expansion days inside expansion week, right? And for the manipulation on the daily, right, low of the week, we can be discussed later, right? So this is the profile. This is only are important, right, to catch in expansion days, right? And for the candle number 5, right, to be an expansion or the chase, it depends on the doll or the key level, right? So if we reach our doll, let's say that we are targeting a weekly, right? Let's say this we have a weekly. We're trading a candle number 4 in this case here, and candle number 3, like this means Thursday reach the doll. So we don't expect Friday to expand, right? We expect Friday to close back inside the range, right? This range to be a bearish candle. So it depends on doll. Anyways, so the second way to profile the market is by using the swing to align, right? So in this example, we have the Monday, Tuesday close with body, right? We have Monday, Tuesday, Wednesday closing above these down close candles, forming a swing low. Only after the swing is formed, right? Now the daily is aligned. Here after the soup, here after the swing, daily is aligned. Now we can expect at least 2 expansion candles and into drawn liquidity, right? So this is a high probability. Wednesday, Tuesday, Monday, Tuesday, Wednesday. So Thursday is the high probability expansion candle, right? And there is a difference between when you talk about an expansion candle, and you can say expansion candle, or you can say a classic buy. When I say classic buy candle, or a classic week, or a classic month, I'm talking about when I say classic buy week, I'm talking about Tuesday of the week, right? When I say classic buy day, I'm talking about London love day, right? So it's not the difference between an expansion candle. Expansion candle usually have 2 profiles for the daily, right? We either have the London love day, which is the classic buy, or we have the New York flip, which is an expansion. Both are expansion candles, right? Anyways, here is the tricky part, right? Sometimes Friday retrace, Monday manipulates. So once Monday manipulate, we don't expect another daily manipulation here. And we expect Tuesday to expand. So we have low of the week, right? High probability low of the week. And we have a Tuesday expansion, and we can profile the rest of the week like this. Let's say that we have a Friday manipulation, right? If we have a Friday manipulation, right, usually Monday is going to expand. like a lot of time. If Friday manipulates, Monday is gonna open high, expand, right? And the whole week is gonna be a bullish, right? Like most of the time. So Monday expand, and after forming a swing on Monday, close, form a swing low with CSD, right? Or if we Monday close above a down close candle, right? From a swing maybe. We expect the next candle to be an expansion candle, right? So if you missed Monday, Tuesday is also a expansion candle, right? So usually after the swing, right, we're gonna have a very high probability expansion candle. After the soup, usually have 2 days of expansion most of the time, right? And the same thing on the swing formation model, right? So let's say that this is Friday. So you have Thursday, Friday, Monday open high, form a swing, right? Tuesday is high probability expansion, classic buy, right? Tuesday, Wednesday, even high probability, right? So this, what does this indicate? So price is fractal. So if you're expecting a something, right, you need to do the profiles right. So it's not fixed thing to do. So this is the only two ways to profile the market using the higher time frame candles, right? In this scenario, the order flow is gonna look the same, right? So you have an open low, right? Low of the week, broke the high, create the low, right? Expansion, broke. We have the OTE on the next day, right? Expansion after the CSD opening price flip. We have another stoop, maybe the kiss of this into another expansion, into another daily expansion, right? So after profiling the daily, and once the daily is aligned with the weekly, and you expect a classic buy candle, a classic buy day, or a daily expansion. Now we go into the 4-hour profiles. So on the daily candle, there is 6 4-hour candles, right? And this is the classic buy day, which is the London love day, right? So you have the 591, right? Asia, London love day, and we expect a 5 a.m. To be an expansion, CSD 9 a.m. continuation, right? Into the doll, right? Whatever three candle model or hard time frame dollar using, right? And obviously there is a lot of profiles, right? We have 5 a.m. Love day, and a love day have relation with the liquidity, right? And key levels. So we're gonna blend it with key levels, right? We're gonna blend it with the. It's not gonna be only high time frame candles only, right? So for high probability, right? Anyways, so this is the first way by using the swing, the manipulation candle, three candle model as the first confirmation to look for buys on the next 4 hour, or it can be like this, right? It can look like this. So we have the swing low formed, right? So we expect 5 to expand, 9 CSD. So it's just the same thing. The only difference is the swing, right? It's also can be like this, right? Which is the same. It's not the same thing, but it can be like this. And 9 a.m. is the one that's gonna CSD, right? 1 a and the one is gonna expand. So once using this high time frame market profiles, usually there is 3 or 4 scenarios that you're gonna use. First scenario is the range, defined range, right? So once we have a defined range, right, once we go below it, there is two scenarios. So we either have a open low and the soup, which indicates a high prices on candle number 3, candle number 4 until normal liquidity is met, or we're gonna have a swing low is gonna form. So 1, 2, 3. So after the swing low form below this low, we expect candle number 4 and the rest of the candles to deliver higher, to be classic buy. So why using this is so important? Because we are not gonna use the swings or the three-candle model like blindly, right? We cannot gonna use like every. We cannot gonna trade every three-candle model or every swing, right? It needs to make sense. So first of all is the range, right? Second of all is the internal to external. If you're using ICT terms, right? So once we hit this FVG, forget about the range, right? Sometimes we have range with FVG, sometimes we have a only range, sometimes we have the both, right? So I'm focusing with the FVG, right? So once we tap an FVG, this is the first reaction that we're looking for, as a third soup inside the FVG, right? So once we have the soup, right, we expect 3 and 4 to expand. Or sometimes we tap the FVG and we form a swing, right? And sometimes we are looking for this, but we never, it's gonna happen, right? Because we have the swing and the rest of the candles is gonna deliver higher. The second scenario, so the second scenario is using a swing low, right? Below a low. So below a low, right? We look for a dump, right? We have look for the soup, and we look for candle number 3 and candle number 4 as an expansion. And this is really important on the hard time frame, right? So let's say that this is a monthly, right? And this is happen. So you maybe have like 2, 3, 4 months of bias, right? Or even higher, maybe yearly bias. And this is the swing. So we have a low, right? Maybe a low that with a high, and this is a swing low formed below this low. Then we can trade the next candle as an expansion candles. And the last scenario is the order block, right? So we have an OB, right? So price dump, tap an OB, okay? And we have the candle number 1, candle number 2, candle number 3, and 4 after the soup. So we are trading 3 and 4 after the manipulation, right? Or we have the swing. So the thing here, if we are expecting a bullish week, right? Let's do this on the weekly profile. If we're expecting a bullish week, we can usually, if this week opens here, let's say that this is Monday and we have a key level. So we're using the same thing. So we have Monday, Tuesday to have the key level. After the swing, Monday, Tuesday, Wednesday, right? Thursday and Friday we're trading in them as a classic buy, right? This is the importance of this. The same thing here. If Monday range, Tuesday manipulate inside the key level, we expect Thursday, Monday, Tuesday, we expect Wednesday and Thursday, even Friday to be an expansion candles, right? So we are aligning. Now we are using key levels, right? Blend with everything, right? Whatever it's the weekly. If let's say this week number 3, week number 4, we are doing the same thing inside this weekly candle. So if you go to daily, we're gonna find the key level here and we're gonna use it, right? Until normal liquidity is met. So this is the all the stuff you're gonna use mostly. And obviously you can use the same here. Monday, Tuesday below this low. If you are expecting a bullish week, right? Monday, Tuesday manipulation, Wednesday and Thursday is gonna be a classic buy, right? If we have Friday below this low and expecting a bullish week, and Monday close like this, right, a form swing, we expect Tuesday and Wednesday to expand sorry, right? This is how we use it with logic, with key levels. So usually we have three things. We either have an FPG, right? We either have swing low or high, or we have an OB or rejection block. This is when I say an OB, you can say a breaker, right? But this is the main key levels we're gonna use. So let's see some examples on how to use the swing formation and Richardson model on the high time frame candles. So this is the British pound, right? And as you see, the market is overall bullish. So we're gonna talk about the what happened last couple of weeks, right? So as you can see, we have a monthly CRT here in place. So we have the range, we have the manipulation candle. So now we are looking for for an expansion, right? So we mark the opening price, right? So if we go to weekly, so as I told before, for the market profiles, we need a weekly manipulation for the monthly expansion, right? So if you go to weekly, as you can see, we have a week one manipulation, right? So as you can see, week one manipulates, right? So what do you expect from week two and week three, right? So this is the overall bias, overall drawn liquidity, which is the monthly high. So you pay attention after the manipulation, we have the market is aligned now. So we can look for a weekly expansion, right? Now we go to the weekly. Let me go back and focus on what happens this week. So once we expect a weekly expansion, we now go to daily, right? So and also at the same time, something to mention. We need to monitor both pairs, right? So if we're looking at GBP/USD, right, we need to take a look at what is happening at the EU, right? So if you go to EU, so that we can see that we have a week one SMT, right? So GU drop below this low, so an SMT, which means we can also expect a weekly expansion. Oh, sorry, this is the SMT here, so which means we can expect this week to be an expansion candle, and the drawn liquidity is still here. So if you want to go to daily, we see that the weekly opens here, right? And we can see that we have a key level here, right? So SMT below between these lows, and we have the key level, right? So once the market is until here, the market is not aligned. Only after this daily manipulation, right? So we have a manipulation on Thursday, right, which indicates a expansion on Friday, right? So if you go to Friday on GBP, we also have a manipulation, right? Why this is not important, right? First of all, is the key level, right, on the other pair. So you need to pay attention. So sometimes you look for buys and you get tricked because of the key level, right? And in this case, you can expect this key level to be reached. But once you reach this, I'm gonna talk about the key levels on the next episode. So this is only about the market profile. But this is something needs to mention, right? So once the GBP drops, and we have a daily manipulation, which means we can look for buys on the next day. Now we go to the 4-hour, which is something really important. So if you can see, now we can profile a daily candle using the 4-hour candles, right? So as you can see, we have a range, as I explained before. We have like on the expansions, we either have a range with FEG, we either have a low, right, or we either have a OB or a rejection block, right, or an FEG, you know. So it's only 3 or 4 things you will find on the expansion day. And as you can see, so below a range we form a swing. At the same time, on the other pair, which is a EU, right, we have a soup below the low. So after, so we have range, right, we have an OB here, key level, right. So we have a soup, which means we can look for buys until the drawn liquidity is met. To be honest with you guys, the what we are gonna use on the entry technique is not only using it for our profiles. So we're gonna blend everything. So it's gonna like be very deep, right? And once we have a bullish uh, a bullish bias, so week 1 SMT is a manipulation, right? So we expect week 2, week 3 to deliver price higher. And once this CRT high is the most drawn liquidity is met on one pair, right? Which means we can expect. So this is the US 30, the monthly charts. If you pay attention here, we are overall bullish, right? And we have this big retracement, right? So we have manipulated multiple lows. So if we use the monthly chart only, right, you see that we have a inside candle. So this is the first signature to look for buys, right? So we look for buys here, and after this month, we form a swing low, right? So we still look for buys. So we expect a bullish month until the doll is met, right? So after the doll is met, as you can see here, we have an FEG, right? And we have the manipulation month. So this specific month did 2 things, right? To Joe. First of all, did the manipulation, then close above this series of down close candles, the CSD. So what do you expect? Expansion, right? So we're still gonna buy this month, right? So this month is a high probability bullish month. So if you go here, do the opening price, right? And go to the weekly, because for the monthly expansion, we need a weekly manipulation, right? So if you can see, week 1 manipulates, right, into this down close candle, right? Key level manipulation. Then what do you expect from week 2 and week 3? Expansion, right? So if we pay attention, this is a very high probability bullish month, a bullish week, sorry, really high probability bullish week. And as you can see here, after this week expanded, what do we form? CSD, right? And the swing low, right? So we're still gonna buy this week, the next week also. So this is a 2 high probability weeks, right? Especially if week 1, week 2, after the manipulation, right? And if you pay attention here, so for this weekly expansion, what do we need? We need a daily manipulation or daily swing, right? So if you go to daily, we see that Monday open high, so we still no manipulation. We have Tuesday open high, and we have Wednesday manipulation. It's bullish week, right? So after we manipulate, then we get the expansion, right? So this is really a high probability expansion day, and you see this just expanded. First of all, the first target is here, the daily, then the weekly target. Since we are at all-time high, you need to be careful, right? Then the next week comes in, right? So this is the next week, and we do the same thing. So for the next week, we have the key level. So this is a opening price. So we have the OB, we have the opening price of the previous weekly OB, right? So we have Monday range, then we have a Tuesday manipulation of the week. So this is a classic buy candle with Monday range, Tuesday low of week, and Wednesday expansion, classic buy, right? Or expansion candle. The thing here, so I want to pay attention. You see this Friday, you see this Monday manipulation, right? Why this is failed? Why? Because of the key level, simply, right? So key level really important. So if you want to trade swing like the manipulation, it needs to make sense, right? It needs to tap a key level, and also if this opens low, then it might manipulate again, right? So if we pay attention here, so it opens low, right? So it may manipulate, and the Monday low is really gonna fade because of the key level is here, right? So you need to pay attention. And something to add is this week is a very high probability swing idea. It's gonna be here, like love week, so you can hold trade for 2 weeks if you catch the weekly low, right? Or even catch the expansion low, the expansion candle. And just something to add before we hit the drawn liquidity for the monthly candle. You see, so I want to treat each monthly candle as so I want to trade for the monthly expansions. We want to trade weekly manipulation, right? So every weekly dump is opportunity to buy. Every weekly CRT, the manipulation is opportunity to buy on the third candle. After a swing low is opportunity to buy. So if we pay attention on these specific candles, right? If you go to weekly, so we are bullish overall. So this week after the manipulation, we look for buys, specific candles into expansion, right? And then there is a manipulation here, we expect an expansion, right? There is another manipulation, and the normal liquidity still doesn't get hit. So every dump, this is the case of that, right? Church before the doll. And we're also going to treat, so we have a range here, we have a key level, high time key level, FVG, we have the manipulation candle, and we have the tree candle model here, right? You can treat this as a range high, range low to range high, or you can treat this specific candle, tree candle, right? The important thing is this is a classic buy candle, this is an expansion candle. So if you pay attention here, if we mark the opening price and go to daily, you're gonna find the same thing. So we have a Monday range, and we have Tuesday manipulation, and we have a high probability expansion day. So we have two of those. We have the three candle model targets, right? And we have the high time frame targets. They're pretty close, but here we didn't tap, right? We didn't hit the down liquidity, and we come back. We have another manipulation for the daily, right? Which means we're still gonna expand to take the doll, right? Then we can reverse or expand that, right? So here we have another manipulation daily, same thing that happened on the weekly to take the higher time frame drawn liquidity. Then we dump, and this low, it was like very expected. So after highs, after drawn liquidity is met, you wanna be careful, right? So you wanna take partial or close the trade, or but the important thing, you need to take a good partial above important highs and lows, especially all-time high. So this is the same thing. And here, like if you say that so the most important thing is the if you want to trade the low week, you can trade this I'm gonna go over this, how you can change this, how you can anticipate this. This is just for the profile, as I said, but this is a like for this weeks, like expansion weeks. Sometimes you get two high probability days until the brown liquidity is met. I mean, until the candle model is complete, right? So once it's completed, it doesn't matter. Like you need to close trade. You need, if you're holding, you need to take partial here, right? So you don't expect the chicken model completed and then you wanna hold trade for high prices. So here with new all-time high, right? So you need to be careful. Sometimes you get one high probability day, sometimes you get two, sometimes you get three. It depends on the dollar. So this is really important. So if you pay attention on the method, we are trading specific candles at specific levels after a specific reaction, right? So after that, we're going even deep, right, inside that one specific candle to also catch any expansion candle. And this is the highest level of precision. This method will serve you well, like long term. If you're looking for a long term consistency, I believe you guys now have a lot of work to do. So open charts, backtest, forward test, take notes, rewatch the video if needed. I make it very easy and boring so the beginner can follow along. I hope this was insightful, and until the next episode, you guys stay safe.